Hello, welcome back, guys. So we are going to be talking about, well, this, I guess it's more just like we're seeing a little bit of a rebound, which is nice. We obviously like
Yeah,
that. Cryptos are going up. But at the same time, it's not, this is not the end game, guys. We're still a very, very long way. And it seems like there's more pain to come. Isn't that right?
yeah, it is. Looking at the DXY, we're going to take a good look at the DXY today as well. And, that has hit my price target, which I gave you as well. And it's just continuing to climb. So it's not looking too good because, as we know, the DXY does complete opposite of what Bitcoin does. So if the DXY is going up, Bitcoin's most likely going down. If the DXY goes down, Bitcoin's most likely going up. And we're seeing the DXY go up. So it's not looking too good on that side of things. But we'll go through all of that today.
No, you're absolutely right. And so just again, we're going to kind of drop into some of the traditional markets quickly just to see what's going on.
Yeah.
Basically, at the moment, hedge funds are piling into record hawkish rate bet pre-Jackson Hole. So basically, what I want to kind of show you is we're seeing this. So this is in the SOFR, my mistake, and this is basically secured overnight financing rate. Just quickly, what is this? It's a benchmark interest rate for dollar-denominated derivatives and loans that is replacing the London Interbank, the LIBOR, basically. But so why this is kind of interesting is it basically is saying, maybe we'll get like a nice little overview here, unleashing record bets that the Federal Reserve will stick to its hawkish, and think of like hawks are bad, doves are kind of nice. So hawkish is like squeezing the economy, and that's why we are seeing this Fed rate, Fed rate monitor, kind of sticking around that 56% level, which I know we went through yesterday. So it is, the market is now beginning to price in a little bit of that pullback, and some more, essentially just some more like aggression from the Fed.
The scary thing for me is that we're seeing the traditional market have this pullback, but haven't really. Well, we're having this pullback as of 2 days. So we've seen the S&P pullback over the past 2 days, but we haven't seen the crypto market pullback over the past 2 days.
No.
And we do tend to see the crypto market a little bit lagged. And if it's not lagged behind, normally it's ahead of the stock market. And right now it is lagging behind the stock market a little bit. So that is a scary thing for me as well.
No, you're absolutely right. You are, because like we're seeing this, the drop of 2% S&P or 2.5% on the Nasdaq. But yeah, like Bitcoin's not. And to be honest, there's not really too much to talk about in terms of like major fundamental news that's driving this. I think we're better off just kind of jumping straight into some of the technicals here, because I think that's really the key driver here, isn't it, AJ? It's not so much any good news. It's these key levels of support and resistance that we are hitting off that are kind of, the ones pushing us in the right direction.
Yeah, exactly. It's a shame because we want some good fundamental news to push this price up.
We need that catalyst.
Yeah, exactly. But yeah, starting off with the S&P, I've talked about this yesterday. If you watched yesterday's stream, and I talked about it, I think it was on Saturday as well. But basically, what we are seeing is the S&P at major support right now. If we do break this, could be very, very bad news, because it does look like what happened in 2008 before the 2008 crash. We saw that rejection from the 200 MA, and that's exactly what we have seen a few days ago here. So we do just have to be very, very aware of that. And as I was saying, Ben, you can see here we've seen the stock market, the S&P pull back over the past 2 days. But if we do just take a quick look at Bitcoin, we haven't seen that in Bitcoin. We've seen slight consolidation towards the upside. So this is a bit of a worry for me, because we do have this bearish flag on the 4 hour as well. If we are seeing the S&P 500 pullback and we are seeing the Nasdaq pullback, as you can see here, we've broken this major support level, which was previous resistance. For me, I don't know what your opinion on this is, but I think we are going to see another pullback for Bitcoin, and I think it is just lags behind a little bit.
Yeah, I mean, I agree. Look, looking at the S&P 500, technically we're in a bearish scenario. Looking at the Nasdaq, technically, and I just mean technically just means charts, not like, factually, whatever, but
Yeah,
just, technical versus fundamentals. Technically, we're in a bearish scenario for pretty much,
yeah,
these assets which are very much correlated, especially the Nasdaq and Bitcoin.
and,
And then obviously looking at Bitcoin, we're in a bearish flag, and we can zoom out on higher time frames. We've had three of them before, the one we just broke out of, and then we had two previously. It doesn't give us too much hope. And now, we're in something similar, but now on a time frame, we're still in another bearish flag. So,
yeah,
like I said, the technicals don't look good.
not.
And that's why I do kind of see people looking at that 10-12K region.
Yeah, yeah, exactly. And as you said, we are still in a downtrend. You can see this very clearly on the Nasdaq. We are getting those lower highs, as you can
Yeah.
see here, and we are getting these lower lows as well on the Nasdaq. So we still are in that downtrend, even though we did break above this resistance. We were still in a downtrend, and now because we've broken back below that previous resistance, which we were hopefully going to use as support, and we didn't. That's even more bearish news. Fake outs are never good. Fake outs do mean that we are going to see the price come the other way most likely, and that's sort of what I do think. But what is holding us up right now is sort of this S&P. I think there is major support at this S&P 500. As you can see, previous support here before breaking down, and previous resistance before breaking back above. But we are sat at this major support level. If we do break it, I do think that next big leg down could be very, very likely. And again, like Ben said, we do have that bearish flag, which in correlation with the RSI has broken towards the downside of the support level on the RSI, which led to breaking towards the downside of the bearish flag. Like Ben said, again, we've had this happen twice again, and in correlation with the RSI breaking support as well. So it's not looking too good, and the technical target is around 12K. But what we want to look at right now is what are the levels to be looking at? What do we want to break above, or what do we want to break below to sort of see these either higher price targets or these lower price targets? That's what we sort of want to look at now. And I'll go into depth a little bit and sort of tell you where I am looking at price either breaking above or breaking below. So right now, on the daily chart, we are at resistance. So we can see this resistance level here, this middle resistance. And as of right now, we are testing it broken towards the downside, and we are retesting that resistance. Previously, it's been major support. It's held it up nicely here. And before that, it's been major resistance as well. So it is going to be a critical level. It was going to be critical support, but unfortunately, we did break towards the downside. So now we are going to use it as resistance. If we can break above this, I do think a retest of around 22,500 is realistic. Testing that resistance at the bottom of the bear flag, which we did break below. But if we do get a rejection here, then I do think the next levels that we are looking at are down at this support level, which is around 19,000. So the levels that we are at right now is around $21,400. If we do get rejected from this level on the daily, I do think 19,000 is the next realistic target. And looking at this chart as well, this gives us a price target of 19,000 as well. We do have this rising wedge pattern here, which we broke towards the downside, and we are currently finding some support. The reason why we aren't seeing this next leg down as of right now is because we're coming into the support at $20,800 approximately. You can see it was a low back here, and we did find some nice support, and we are getting a little bounce off of this level. But if we do get rejected from that resistance on the daily, then 19,000 will most likely be hit, which is actually the technical target for this rising wedge pattern. So 19,000 looks like a pretty realistic target for me. But as I said, only if we do get a rejection from that resistance on the daily. If I just show you that again right here, if we do get rejected here, then the likelihood of it is we will come down to that $19,000 target. Right now, we are still testing the resistance. We haven't been rejected. What I would be looking for is a nice candle break below that resistance again for the confirmed rejection, and then we will most likely come down to 19,000, hitting that price target of this rising wedge as well. But as I said, we are getting held up quite nicely by support at this moment in time, which currently sits at $20,800, $700 ish. And that's why we are seeing this bounce. Also, we had a slight hidden hidden bullish divergence, which is pushing the price up ever so slightly. I haven't seen a big reaction from this hidden bullish divergence, but we've got price action towards the upside, which you can see on this green trend line here, but price action towards the downside on the RSI. That is a textbook hidden bearish divergence, and the indicators are still in that oversold region, meaning that this hidden bullish divergence could still play out. So that could be what pushes Bitcoin above the resistance on the daily right here. So there are bullish indicators and there are bearish indicators, but the only thing that I'm looking at right now is this resistance here. If we break above it, then most likely that hidden bullish divergence is going to play out and we will come up to around 22,500. But if we get rejected, then the continuation for that rising wedge pattern down to 90 is going to be something that is very likely as well. And something that can really help us out here is actually the 4-hour chart. So what I'm looking at on the 4-hour chart, the shorter time frame, is this smaller bearish divergence on the 4-hour. And again, if we were to break towards the upside of this, then the likelihood of it is we will go back up to around $22,500. There is going to be a bit of resistance there as well. See, I'll just draw that on the screen for you here. There will be a bit of resistance in that area as well, so we do just have to be aware of that. But if we do break towards the downside of this bearish flag, then the target for that is around $18,500, which would hit that $19,000 target. And if we were to come down to that level, then there is a lot of support around sort of that $19,000 level as well from these previous lows back here. So there is a possibility we could get held up by this support. But if we did break the support, then we're looking at the $12,000 target for this bearish flag. But yeah, as of right now, if we break above this resistance, then I think 22,500 is going to be retested. But if we get a rejection, then I think 19,000 is that realistic target.
Yeah, no, I absolutely agree. And I think in terms of timeline as to like how long this will take to kind of play out, obviously we're always going to be watching those daily moves especially when we are at these key level of support and resistance.
Yeah.
So obviously that's something that we'll be doing in our daily streams, but these wider kind of slightly bigger moves, especially if we do get pushed down off of this, we break to the downside of that bearish resistance, the bearish flag on the slightly smaller time frame, then that's where I would see us, and obviously it really depends about this 18,000 level. If we can keep that, then I think we're okay. But I would probably say we're looking at maybe a solid month, maybe two of move to the downside and then slowly try and reclaim that back up, if we are pushed much further.
Well, we do have September coming up as well. I've mentioned this multiple times. September has been a very, very bearish month in all of Bitcoin's history. The most bearish month out of all of them, looking at the median and the average. So yeah, we do just have to be aware of that as well. Coming into September, we could see a rejection. Well, if we get this rejection from the resistance down to the support, and we do that coming into September, then it's not looking too good for us. So we do just have to be aware of that as well. But hopefully this major support level could hold us up, so we don't see that $12,000 target. But for me, if we did come down to $12,000, it's not too bad because we can just buy Bitcoin at those cheaper prices. And I never thought I'd be able to buy Bitcoin below around 12,000 ever again. So it for me is a good buying opportunity.
No, that is very true. It is very, very true. And I think, even if we do kind of break to the downside, I don't think it's going to be too drastic. I think we'll quite quickly bounce back up. I know, we went through some of the economic data and also some of the hedge funds, how much they have in orders, just sitting there waiting. They even go down as far as 10K. There's weirdly nothing below 10K. But loads sitting at that 10K level. But even, obviously, as you can imagine, there's quite a lot at 16, 15, 14, whatever, all the way down. But that's where we're going to see loads of interest. But yeah, I still think even if we do break below, there's only going to be about 1 month, maybe two, of this kind of sluggishness. Unless we have something absolutely drastic happen. Like that chart you showed yesterday, that S&P moving. This is very similar to 2008.
Yes, that's
be the only real severe catalyst.
Yeah, it is very, very sort of worrying for Bitcoin. For Bitcoin, yeah, if the S&P did continue to follow that bearish scenario from 2008. Just quickly, I just want to show the sort of range that we're looking at on the 1 hour. So if I just draw this range in very quickly for you, putting in the support at the bottom and we have the resistance at the top. This is another thing I'm looking at as well. This has been a sort of a good area to trade with as well, but this sort of just gives us another understanding. If we can break above this resistance up here, which is currently sat at $21,500, then I think we are going to go up to that $22,500. But then again, we break $20,800, which comes in line sort of with the support at around $2,750 as well. Then again, we're going to come down back down to that 19,000.
Yeah.
Sort of the same scenario is playing out on a shorter time frame. We do have this big range that is playing out on the sort of 4 hour and the 1 hour. But what I'm looking at right now is this 12 hour. And if we are going to come up and test this resistance again, because looking at the indicators, we are in that oversold region again. So the likelihood of it is maybe a little push towards the upside before that next leg down, if Bitcoin gets that next leg down. But if Bitcoin does come down to 19,000, I do anticipate the price of Ethereum to come down to this level here, which is around $1,350. If we did break that $19,000 level, then I do think Ethereum can come all the way down to $1,000. And if Bitcoin did come to $12,000, then I think we could see a much, much bigger pullback for Ethereum as well. Maybe back down to sort of the $900 level, $800, then maybe $700 level is what I would be looking at. But right now, we do just want to see what is happening with Ethereum right now, because the indicators are so very oversold. I would be expecting a little push before the potential next move towards the downside. But if Bitcoin just sort of decides that it wants to move down, then Ethereum will most likely do that, just ignoring these indicators. So again, for Ethereum, the target is $1,350, and then the final price target for this rising wedge, which did break towards the downside, is around $1,000. So if Bitcoin hits its price targets, then Ethereum will most likely hit its price targets as well. I think that's everything sort of I'm looking at on the charts.
Yeah, I just want to add on for that Ethereum there.
Yeah.
I think it's conceivable that we might see Bitcoin drop down to maybe like 12K, but I think with the merge, the amount of time that this might take to drop down to these levels, unless it's something drastic, I do think with the merge, we might be able to have some kind of like level of support, because that is coming up in the next 3 weeks. So there will be some anticipation, I guess, some buying volume, like in anticipation of this. So I would say, like, obviously they're both correlated, as AJ said. If Bitcoin's dropping down, Ethereum's dropping down as well. But I would say, Bitcoin potentially has a little bit more room to drop, just because it doesn't have anything crazy that's going on. Whereas, if this merge goes well, Ethereum could be in a very good place.
Yeah. And, if we do see Bitcoin pull back, we are most likely going to see Ethereum pull back much harder.
Yeah.
Percentage-wise, same with all the altcoins. But as you just said there is a little bit more room down for Bitcoin. I do agree with that as well, because looking at this stochastic RSI, this bottom indicator down here, we can see when we get into this overextended region like we did here. Let me just get my pencil out. We got into this overextended region right here. Looking at the price action chart, that was this period here, and we did see that next leg down. We got that again back here. We saw we were in that overextended period. That lines up right here. This was only a little move towards the downside, but before we saw that next push to all-time highs. But then we got overextended again on the stochastic RSI, that signal at the top, and then we got that massive leg down. So you can see that when we are in this overextended period, we do tend to see pullbacks, whether they are big pullbacks like we saw here, or those smaller pullbacks like we saw here. We do tend to see that pullback, and that is exactly what we are seeing as of right now. If I just get rid of these drawings on the screen right now, we can see that the price is having that pullback. As you can see here, we are getting this big red candle, and the indicators do seem like they are beginning to sort of flip bearish again. So this could be another indicator that we are going to have that next leg lower. Whether that's going to be a big move towards the downside, all the way down to $12,000, or whether that's just going to be a move to sort of $19,000 again, we don't know. But what this is indicating to me is that we are going to have another push towards the downside before we can start seeing any more price action towards the upside. So that's just another indicator to keep you updated on as well.
There we go. There we go. All right, well, guys, obviously make sure that you follow us on Twitter to get this information on a daily basis, and make sure you don't miss anything out. But apart from that, I think we're just going to wish you, hope you have a good day, and catch up with you tomorrow.
Yeah. Make sure you slap that like button. It does really help us out. And if you are new to the channel, make sure you do subscribe and turn that bell notification on to get notified when we are going live for these sort of market updates. And I hope you enjoyed this video as well.
There you go. Have a good day, guys. See you tomorrow.
See you tomorrow, guys.